There are several ways to value business assets during a divorce. If it is a particularly successful business, then there may be the need for a forensic accountant. And then the forensic accountant would essentially look at all of those business records. They would look at profit and loss sheets, taxes, business accounts, for example. And they would essentially do an evaluation that would be presented to the court to determine what portion of marital equity the other spouse would be entitled to, if any. If you are a small business owner or a solo practitioner, then there are also several ways that the valuation of the business could be done. A forensic accountant could also be brought in just on a smaller scale to try to determine the valuation of that business. If the business doesn't have too many assets, then it is something that possibly the family law attorney would be able to determine based on documents that they receive via discovery, such as the profit and loss statements, the tax returns, and any business account statements. By reviewing these documents, family law attorneys can pretty much determine how much general income is received by that business and determine what a possible value is that would need to be split if that is something that is up for contention in a divorce. What are some ways that you can protect your business interest? One of the biggest things that I always recommend to my business owners is to always keep your accounts separate. Keep your business account, and keep your personal account. You do not want to commingle those funds. What I've seen time and time again is when a business owner will put personal expenses on the business card, because essentially what that does is it opens up all of those assets that are being put into that business account and being argued as personal because you're commingling those funds. So that's the number one rule that I always tell all of my business owners is to keep those separate. Another way that you can protect your business interest is to possibly do a prenup. And then with that prenup, you can clearly delineate what interest of that business should remain yours and what, if any, equity that you would be considering to giving the other party. So, how are business debts handled? If a debt was accumulated during the marriage in Georgia, it is all seen as marital debt. So, Georgia sees everything after the date of marriage as marital, right? So, even if it is a debt that accumulated solely in the name of one party, if it occurred during the marriage, the argument could still be made that it is marital debt. So what's a big mistake that a business owner can do during a divorce? The number one mistake that I see is when a business owner commingles their funds. I always emphasize to all of my business owners to make sure that you have a separate business account and that you have a separate personal account. So say for example that in the course of your business, you're getting all of these deposits into your business account. Say for example, you get $100,000 into your business account, and then you're only paying yourself $20,000. So then you're putting the 20,000 into your personal account. But say after that, the opposing counsel is looking at your business account and they see that, you're going to Walmart and you're going to some fancy steakhouse, or you went over to a fancy department store to buy yourself some new clothes just because. Then at that point, the argument is made that you are using the business account for your personal expenses. And because of that, that means that any money that goes into your business account should be considered personal. And in that regard, that number will be used to calculate things such as child support, alimony, or division of assets. If you have any other questions as it relates to being a business owner undergoing a divorce, feel free to reach out to us here at Daniels and Taylor.